You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
NGX Energy, the market cap is about $125 million US. And then for Touchstone, it's about $491 million US. And they're comparable and they have roughly the same reserves as we have. And they're also gas producers. So, and we're at about, like you say, $8 to $10 million US. So we should be in the same ballpark. I think for Trillion, we just have not got our message out, right? So I also like to say that our market cap, if you remove the oil, which is about $4 or $5 million, I can get more for the scrap metal on the offshore platforms and the facilities than what our market cap is worth.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers. And in today's show, you're going to be getting a company introduction and company profile interview to a company that I've been purchasing over the last month. I was introduced to Art Halleran. He is the president, CEO, and director. And we had a nice call about a month ago. And ever since then, I've been buying stock because I see the value and the virtues that you're going to learn about today in this interview. I see a lot of upside with this company. And even on a fundamental basis, I think it's undervalued right now. So Art, welcome on to Mining Stock Education for the first time. You're in the energy business. The company is Trillion Energy. You're not a rookie to the business, and you've already built a successful energy company up to $500 million market cap. So perhaps give us a little more background on yourself. What is your experience in the energy? And tell us about your last successful company, please.
Okay, well, thanks for the intro there, Bill. I have about 40 years of petroleum experience. I have a PhD in petroleum geology. I've gone from juniors, majors to get a good background. And then probably the last 17, 20 years have been mainly on my own or with startups. Worked in 27 different countries. And one of the latest good success stories I have is Canacol in Colombia, which in 2007, 2008, I formed with 3 other Colombians. And currently right now it's valued at about $500 million and it's the largest gas producer in Colombia. And then I have other successes in Egypt, which was Rally Energy and Scimitar. That one sold for $600 million. And then there's some other smaller success stories there. So I have a lot of good experience in being able to recognize undervalued assets.
Your current main flagship asset is the SASB gas field in the Black Sea, just off the coast of Turkey. And your current market cap, I should mention, also has been fluctuating between about $9 and $12 million Canadian. But just on a fundamental basis, walk us through why the company is undervalued because of your flagship asset.
Okay, we are a partner in the SASB offshore the Black Sea. It has a value of about $608 million of infrastructure, so 4 platforms, gathering system, onshore facilities, and like I said, we own 49% of that. In about 2007, 2008, they drilled 4 gas pools from those platforms, and that's what we're producing out from. And those are the only 4 that they have put on production. So it's from birth to almost the last end of the field's life. We have 4 more identical gas pools that have been drilled, tested, and mapped, which I could say are identical to the 4 ones that we produced. And so we can just reach from the existing platforms and put those on production. And because we go from the existing platforms, we will drill, complete in a couple of months. And then we put the gas on, and within 45 days, we get our revenue starting to come into cash. In addition to those 4 pools, which we have a third-party engineering report done on, we have 6 development locations or pools, which are, again, identical to the 4 that are produced and to the 4 that are discovered but not produced. And with that together, just from the reserve reports and resource reports, give it a value of over $200 million. That's US.
And again, your market cap right now is Canadian, between 10 and 12 million. So there's a disconnect there. And your half, you said you own 49%. So your half of the sunk costs is over US 300 million. And that's the platforms, that's the pipe at the bottom of the Black Sea. You have a processing facility, and you already have an offtake agreement too, right?
That's correct. Yeah, and it's all the gas we produce. They will take it, and then so to put on these other fields, there's basically no additional facility cost or other infrastructure capex, which makes it very, very lucrative for us. And the one thing that I always forget to mention is that we actually have oil production onshore. We produce 155 barrels of oil per day, and that field alone is worth our company value, right?
And what is your cash flow per year on that note?
For that one there, it's probably about $2 million a year.
Net cash flow? Or
that's correct, yeah.
Okay,
that's
so
our cash flow, yeah.
Okay, so with putting this gas field back into production, there is one hurdle, and that perhaps is one of the reasons why you've had a lower market cap. You need US $20 million, don't you, in order to recommence production here?
That's correct. So the real hurdle that occurred was when we got the field, the data for the gas fields was not up to par and kind of missing. And so to be able to get a security exchange quality reserve report, we had to redo the seismic, like relook at it, remap it, and so on. So that caused us a good delay. And we had everything ready. We had investors lined up. And that was February 2020, and COVID came in. And so then, as you know, the petroleum industry kind of ducked its head. And it took for a while now for us to get things lined up. And so right now we have about $10 million of equity that the small equity banks are willing to put into the company. But for us, the share value is too little. Like we're at 10 cents Canadian, and to put in $10 million US in equity would not be fair to the shareholders that are already in it. But we are looking at a debt, and part of that debt is we are talked to now two drilling service companies, and we're getting a complete package. So they will do the drilling, provide the consumables, and all the other services, so we can see the value of that. And because they know that our 4 fields that we are going to put on production are 100% there, we're in discussions at making a payment plan so that we don't have to come up with all the money up front, that some of the money will come out from future revenue, which is kind of like a pseudo debt financing or instrument, which then means we can take less equity. And at the same time, we've also been approached for a debt royalty type instrument. So that gives us a good choice of what we want to do. And the idea is use as little equity financing as possible.
And how soon this year do you expect to be able to bring in the full 20 million in order to start that 45-day countdown to production and cash flow?
Well, again, we could bring in 10 million tomorrow, but we don't want to. But I would say you're looking at probably a month. We start bringing that money in. And then that means we would be spudding in August for the first well. Right.
So cash flow this year.
That's correct. And that 20 million is going to give us the $200 million value, because not only we will drill the 4 proven pools and put them on production, we will then, with our revenue, continue to drill the 6 development locations or pools. And at the same time, we have another 7 exploration that we will keep de-risking.
So what is the intrinsic value, just based on the gas reserves that you know you have? Again, your share price is around 10 cents Canadian now, but what's the intrinsic value as you calculate it?
It's about $1.25.
And could you elaborate a little bit how you got to that conclusion?
So that would be with the 2P reserves. So that's the reserve, the 100% sure. And then with we call them prospects, but they're not really prospects. They are actually development wells. And so they are faulted limbs of existing pools. And they have about a 90 to 80% chance type thing. And with that risk, so we risk it. With that, that'll be $83 million. The 2P is $74 million. And then with our share float, that gives us about a buck and a quarter value for the shares.
Art, so one of the most compelling points when we originally talked, you pointed out two comparable companies and their market cap relative to your $10 million US market cap currently. Can you talk a little bit about these two companies and why you see yourself trending towards their market cap?
Well, for NGX Energy, the market cap is about $125 million US. And then for Touchstone, it's about $491 million US. And they're comparable and they have roughly the same reserves as we have. And they're also gas producers. So, and we're at about, like you say, $8 to $10 million US. So we should be in the rough same ballpark.
And they went up significantly over the last year, I think we should point out too, right? Their re-rating occurred over the last 12 months. That's
correct. And I think for Trillion, we just have not got our message out, right? So I also like to say that our market cap, if you remove the oil, which is about $4 or $5 million, I can get more for the scrap metal on the offshore platforms and the facilities than what our market cap is worth, right? And the other thing about Trillion is that if you can, I always tell everybody, like, I'm a geologist, but I don't mention geology in this because I don't have to complicate it with anything other than if you can think of cars. So we have, whether it's 6 and 4, we have 14 cars. They're identical. We've driven 4 cars, right? We bought them, we have driven them from the beginning to the wrecking yard. We have another 10 cars identical that we have parked in the garage. And that is what we have. We have 4 proven, drilled pools that are not produced, 6 more development pools that are identical to the 4 that we've already done. So there is no mystery, right?
And just to put things in perspective again, because this is what sold me on the company, in 2022, if you're successful with this plan, what will your free cash flow be?
So our free cash flow will be between $1.2 to $1.8 million per month, right? And that's why when we talk about the rig companies and so on are actually looking at us to say, okay, they don't mind if we make payments after the project is finished drilling.
And then in 2 years, if you're successful and you build out, your cash flow, I understand, is even going to increase beyond that.
I always talk about the reserves first, and then we have the prospects, like the development locations. But there are other ones that we're working on. That's about another 7. And so we will never, when you look at our presentation, we have the tail going down. Well, we're not going to have that steep of a decline because there are additional prospects that are there. And then getting back to the new discovery that they have, like, so TPAO, the Turkish government, has made one of the largest discoveries in Europe in the last 30 years, and that's north of our block, and it's like 14 TCF. What that tells us is that there is a lot more gas being generated in the source rocks and migrating into traps. And so our block now, we're looking not only for the pools, like I say, the cars that we have already defined. We are looking at deeper potential, and we're also looking at the similar type cars around our block, which are contiguous because nobody can compete with us. And we're looking now at larger, more, I'd say blue sky, but they're a lot larger, bigger hitting gas targets that are not necessarily on our block, but nobody can compete with us because we have the infrastructure. But we are now looking at them with the fact that there's a lot more gas being generated in the Black Sea than what was thought before. And we are the only public company that is producing in the Black Sea on the Turkish side.
One of the first objections I had for you, or questions when we first spoke, was the fact that the jurisdiction is Turkey. Could you share with my listeners why you think that could actually be an asset, not a risk?
So our royalty is 12.5%, and corporate taxes is 22%. We won't be paying corporate taxes for a while because of the amount of investment that we have. And for the 12.5% royalty, that's a really good fiscal regime, right? And we've been producing there since 2007. We've never had an issue. We've always got our money, and the royalty has never changed.
And relative to North America, you actually make more money for your product too.
Yeah, that's correct. So we're getting $6 to $7 an MCF. And it's been like that for probably 6-7 years. And it's projected to be roughly the same in the future. And the reason is they import 99% of their gas. And we are a domestic producer. So we get the same price as what they pay for their gas they bring in.
And the fact that your JV partner, which owns 51% of the project, is a state-owned company, that's actually a security feature for this project too, isn't it?
Yeah, it is, because it gives us a scale that we could never actually, have, because you have this huge company. And so we get services. Nobody is going to make an issue with the gas contract, because the people who buy the gas from us buy it also from the government. And so things are pretty stable. They also look to us to operate and drill the offshore, because our staff in Turkey are the only ones that have the expertise for in this depth water in the offshore, the Black Sea there. And the thing that also people don't realize is we have four production platforms offshore with all the gas facilities and everything.
You currently trade on the CSE in Canada and on the OTC here in the States. Is there any plans as you bring this into production and you really start to generate cash flow? Is there any plans to upgrade possibly what exchange you trade on?
Yeah, we're actually looking at the London exchange, right? So we see ourselves as a low risk or de-risk gas producer, because that's a good niche now to be in that. In Turkey and so on, because they need the gas. And so, but we'd like to grow in Turkey. And also there's other opportunities in some of the Eastern European countries. And London has more of an investment appetite for those areas.
What about your share structure? Talk to us about the current share structure of the company, please.
Let's see, probably about 6 to 10% is owned by insiders. And the rest are, out in the public there, right? And also for myself, I've been involved in the project now for almost 4 years, and I have not sold one share. I've hung on to them all the time, because I see that there's a good upside value in this. And the reason, again, when you talk about Canacol, or when you talk about Rally Energy and Scimitar in Egypt, and now you talk about Trillion, what attracted me to Trillion was the asset, right? And the asset, it's always there. It's very, very good asset. And so I'm going to hang on to my shares until I get the shares up to the value it should be.
Excellent. Well, thank you, Art, for this overview. To learn more about the company, go to trillionenergy.com. I'm going to put a link in the show notes. You can also reach out to Art with an email or a call. That information will also be in the show notes. And the ticker symbol in Toronto is TCF, and it's TCFF on the OTC. And Art, doesn't the company also trade in Frankfurt right now?
Yes, it does. Yeah.
Okay, great. All right. Well, we will be following up with you, Art, as your new show sponsor. So we'll be talking to you again.
Okay. Thank you very much for this opportunity.